Welcome back. You're watching First Trades here on ET Now, and we're coming to you live, in fact, from the Suzlon studio. 250 points higher on the Nifty. It's a very nice bounce we've seen, much better than what we were penciling in earlier this morning. But let me quickly go across on the interview, the latest on the interview with Aisha Faridi. Safir Anand gets stock and sector specific as well. Why he's owned Hero MotoCorp and Ather at the same time. Why EMS stocks that got hammered in March correction turned into one of his best trades of the year. And why he thinks the market is mislabeling AI software companies and bashing them along with the rest. Here's an excerpt.
The world, and especially India and the investment climate, is changing just so rapidly and so fast. I remember during COVID lockdown times, it was all about shut businesses, tourism, aviation, because those businesses were available at mouth-watering prices, right? And then you had that entire IT and consumption K-shaped recovery, which sort of led the markets. From there to now, the world is so different. I mean, IT is something that you would buy only if it's at the bottom of the heap in terms of valuation and that one odd chance that you would get, like we just talked about. But it's now about renewables. It's about AI and the quasi-AI trade here in India. It's somewhere about pharmaceuticals and healthcare as well. From the current pool of what the market has to offer, what were you tempted to buy in the March lows?
No, so again, if I don the hat of a consumer and I sort of sit in an independent room and say that, I have to make notes on where I see tactical shifts. First, I would, take a pen and paper and write down those particular sectors or segments where I see a tactical shift. Then I will have to evaluate within the sector which company is making a sizable difference, or a company that may not be the leader and maybe probably the third or fourth, but is, cheaper in respect of what it is doing vis-a-vis and maybe not losing market share and sort of trying to build on the competencies that the leader has. For example, in the past, I remember a chat on your channel itself when we identified and spoke about hospitals and how the entire system of ATM access will become available to people in tier 2, tier 3, and they'll have access to top doctors, and how the foreign money was, trying to acquire a large number of hospital chains. And, we got lucky with that sector. Your viewers got very lucky. I think the minimum return that we probably got in a hospital stock was about 10x. And thereafter, data centers, where we spoke about at the time of the union budget, where our finance minister herself was speaking about data centers and how it was a priority for the government. And in 2022, many of these data-centric businesses were very cheap, and so were the suppliers of power and water to these data centers. So today, when I sit back and I ask myself, what is happening, there are certain sectors to me, at the risk of being wrong, that appear to be quite tactical. The most obvious of them is e-vehicles, and therefore anything that eliminates pollution. Then, if I identify a sector like this, my question is going to be, where is the transition going to come in first? And it appears to me that it is easier to transform public buses and public trucks rather than impose a condition on an individual like me who may have a preference for a luxury car and therefore may not entirely go the way of buses and trucks. And then you identify a few companies that are making these products and say, is the market being fair to them? Or is the market, in its wisdom of correction, punishing them also, which may be right for the time being, but which may not be a story that plays out in the long run. So e-vehicles is just one example of a theme. Commercial e-vehicles is an example of a theme. Similarly, for example, if say a two-wheeler company, today the market may react to rains and say that rural India may not react the way, that the company's quarter is expected to be in terms of sales and all the data that comes out repeatedly. But the question is that many of these companies are also transiting into e-vehicles. And motorcycle is a very strong mobility segment. Motorcycle and scooters are very strong segments. And some of these companies are well placed in terms of technology, and they have invested heavily into e-technology. then my question is that I will go beyond a rainfall effect of a quarter or two and start looking at where the value emerges. So again, that was an example. I can give you many such examples, but then I'll end up talking like non-stop.
Please do, and throw in those names as well. But what gives you conviction on Ola still? If I'm guessing that's one of the names that you talked about.
I'll give you an example of a company that I have owned for a long period of time, which actually I had bought it at the time for a different reason when there was an ED action on them, and I believe that the governance standards were good. A company, for example, called Hero MotoCorp, or for example, if there is a correction in the market, a leader like Bajaj or TVS, I mean, they're very clean in my mind. So the only question I have to see is the transition. Now, Hero itself is invested in Ather, and I own Ather as well, and Ather itself is doing a tremendous amount of business. Hero's market commentary talks about the fact that more than 90% of its business in 2027 will be centric around e-vehicles. And this is before the Delhi government announced the e-vehicle policy. So I would assume now the management will move that 90% also to a 100% mark, because they cannot sell petrol and diesel, beyond that. And then the question is, Harley Davidson keeps coming back and saying, I want to do more business with you, and they keep doing more businesses, and then they go to Tirupur and set up a global parts plant and things of that sort. And I also get a reward in terms of the company, in terms of a dividend yield, which therefore gives me the ability to think that, my ability to beat a fixed deposit or inflation is sort of reduced because of that behavior. So that is just an example. And Ather's market cap going up is, I don't even think, to be fair, captured in the dynamics of this trade. And then also have safety, which means that I'm not buying a sort of an unknown company which will sort of blow it up and somebody will say I'm, packing up the company, etc. So I'm sort of even more encouraged by that factor. So that's just an example. Similarly, there are companies that make buses, and they come on channels like yours, and they talk about a lot of vision of what they're doing and the standards. And I'm very encouraged when I go to the road and I see that even today, say because of heat wave, somebody gets the ability to sit in an air-conditioned bus. And it doesn't come at an economics that is so destroying for him that he lets that bus go and he wants to wait for a non-AC bus. There are people, for example, who do take to that segment. And, and now Europe, for example, is talking about air conditioning problems. So public transportation in this respect becomes far easier as a play. In the March correction, since you were so specific about March, I felt the EMS companies came tumbling down, and it became almost fashionable for people to come on Twitter and say that look where they've fallen from, without looking at the fact of where they grew from. So the idea journey of an entrepreneur is always going to have phases. Now, at the correction, I have to determine that is manufacturing totally destroyed, and most sensible papers that I read will talk about how AI is actually going to make manufacturing more effective. At that point of time, oil was also at a peak, $125 plus, and you'll say that, maybe it can go to 150. I don't have that ability, but my personal take was that the world will unite to bring oil down. And if oil comes down, they will also, end up benefiting. And then the government of India repeatedly makes emphasis on manufacturing and keeps talking about how innovation should set in and how manufacturing scale should go up, and FTAs are being signed with emphasis on manufacturing and many such things. Including possibly addressing ease of business. And then you come and say that, look, I think the valuation has become more behavioral now than disruptive in a true sense. And therefore, as an example, in March, I bought some of the EMS companies. Now what happens is that suddenly then somebody comes in and discovers that, there is momentum, and first the traders come in, and then the 200-day DMAs and other things come which go beyond my competence, but generally. And then research reports start because somebody says you've got a subsidy or you bagged a big order or something of that sort happens. In fact, some of them got upgrades now. But they've all moved up 30 to 50 to even 70 to 80% from March. Now, I may not sell today until and unless the valuation starts pinching me. But if the orders dry down or the execution gets delayed, etc., then I have no loyalty towards a stock in perpetuity. I will have to obviously explore my returns. So that became another theme, just to give you an example. Now, in March itself, companies that are into purification of water and they cater to, the data centers throughout need a lot of water to cool down. And then there is a lot of technically pollution that can be created. And those companies that are into water purification, the market leader, particularly in that segment, got bashed out for just for the fact that somebody is, in panic mode and he feels the market will go to XYZ level. And I'll say that maybe it goes to XYZ level, but this company's trajectory appears to be strong, and therefore you bought the same stock. Actually, there's a stock that I spoke also about on your channel as an example. Then suddenly, just 2 or 3 months later, the stock is up another 50%. Now you again have to come and say that should I remain parked, or should I just take that money out, or should I maybe something great has happened with the company. So there are endless examples. In fact, I have a list of about 10 sectors that look appealing to me today. But the question is, my homework is not complete on all those 10. Like, for example, I like organic foods. I feel people are wanting to have pure food. They're worried about adulteration. The FSSAI started crackdowns and other things. But organic food is not a label that just basically says that we did not, utilize these preservatives on the food. Many of them may be unlisted. If they're unlisted, they may be actually selling on a platform. Maybe QSR delivers them faster than somebody else, and therefore you'll come and say that I only have to find the axe and shovel theme and find my proxies there if I don't have a direct play. And one day when a direct play gets listed, and if it is credible and if it is affordable, then I'll buy it. So there are many such segments that are very, very interesting even today. AI itself, there are software companies in AI, but they are being labeled as software companies as a generic label, notwithstanding the fact that their specialization is in AI. And the market is bashing them as well. And therefore, maybe they are good pockets themselves.
All right, and you can catch that full interview on ET Now. But I'll quickly switch focus. After flagging a delay in semaglutide supplies due to an API quality issue, Dr. Reddy's clarified that the supply will resume by late October or early November. Meryl here with the details.
That's right. Dr. Reddy's has now provided more clarity on the semaglutide supply issue, and brokerages across the board have cut their EPS estimates for the company. Management of Dr. Reddy's has said that the problem emerged during the scale-up of its synthetic API manufacturing process for a newer batch, not affecting the previous batches which are already in the market, implying that no widespread product recalls need to be executed. They did mention one recall taking place in India, but that seems to be a completely unrelated topic. The key timeline for investors now to watch is end September to the beginning of October, where the new API process will now expected to be completed, and the new API is expected to be validated, with finished pen commercial supplies only to begin starting November of this year. Dr. Reddy's therefore now expects to supply around 7 to 8 million of these semaglutide pens, as opposed to their previous guidance of 12 million pens for the financial year FY27. And management is also acknowledging that they will not be able to supply to their partners in Canada, while they've also mentioned that there will be no penalty clauses for not being able to complete these supply agreements, but some commercial agreements will have to be renegotiated. Brokerages have responded to all of this by trimming their estimates. MK has cut FY27 earnings by around 7%, Nuama by roughly 9%, and DAM Capital by 5%. They've also seen that their prior FY27 margin assumptions, which was closer to 20% for Dr. Reddy's, now seems out of reach. And they have also flagged uncertainty regarding the company's validation timeline of late September to the beginning of October, deeming it as aggressive. That is going to be an incredible topic for investors to watch when it comes to Dr. Reddy's going forward.
Okay. Also, thank you so much for that, Meryl. Apollo Micro all set to acquire 41.3% promoter stake in Premier Explosives. Acquisition of 1,550 crore transaction to be an all-cash deal. We spoke with TV Chaudhary, who is the managing director, executive director at Premier Explosives. I beg your pardon. He said that the financial impact of the merger will be seen in FY28. Listen in.
We are expecting a good consolidation of our both the strengths of Premier Explosives and Apollo Microsystems, where they are strong in electronics and defense electronics and aerospace. Future is going to be electronics and explosives rather than one item. So that was the idea, that we'll be able to achieve better things. So I think I don't see any integration hurdles, because the facilities are separate and then the expertise is separate. They have the expertise of electronics and we have the high energy materials and all this. We have to inform them the change. If they have any issue, they may come back to us. But in certain cases, like the board members and all those, if the new numbers are there, we have to take the consent of approval, rather, not consent, approval of MOD and then DIPT. I think the difference will come in the next financial year. Current financial year is already drawn, what we are doing and what we're doing and all those.
Okay, all the time we have on this edition of First Trades. Thanks so much for tuning in.
Hi there, good morning. You're watching Midcap Masala on ET Now. I am Snehi Shah, and of course, you're catching us live from the Suzlon studio here at ET Now. This is a show where we're going to be delving deeper into the broader end of the market, give you a sense of what's happening in the nifty mid-cap and small-cap space. First, talking about the index, it's a very healthy 1% uptick coming in for the Nifty today. 24,200 thereabouts is where we're at right now, and solid show of strength coming in from the broader end that is nominally outperforming the benchmark. The Nifty mid-cap index is higher by about 1.1%, and it's a 1.25% uptick coming in for the Nifty small-cap index. Everything looking hunky-dory in the market right now. The India VIX has also cooled off by about 7%, so looking very good. Well, that's at an index level. Let's also take you through some stock-specific action that we're seeing in the market right now. And let's start by talking about Muthoot Microfinance. That one reported a strong Q1 FY27 business update, with AUM rising 18% year-on-year to 14,457 crore rupees and disbursements surging 49% year-on-year, reflecting healthy loan growth. The company also reported improved collection efficiency of 97.97% on the back of these very robust Q1 updates. You've got Muthoot Microfinance trading with gains of about 9% and looking very good over there. Shifting focus, another high flyer in trade today is Lux Industries, after the company has signed an exclusive licensing agreement with Reebok to design, manufacture and sell men and women's innerwear and thermal wear in India. The agreement is effective immediately and is renewable for up to 10 years, strengthening the company's premium brand portfolio. That stock seeing gains of about 6.25%. Shifting focus then, Vikram Solar is trading higher after signing an MOU with the Tamil Nadu government to set up a 15,037 crore battery energy storage system manufacturing plant. And this project is expected to strengthen the state's energy storage ecosystem, create jobs, and of course boost Vikram Solar's presence in the BESS market. It's a 2.5% almost uptick coming in on Vikram Solar as we speak. And the earnings candidate, the management we are going to be chatting with in just a minute from now, Anand Rathi Wealth, is trading higher after reporting a 24% year-on-year rise in its Q1 PAT to 116 crore rupees, while revenue increased 18% to 336 crore. The company also crossed its 1 lakh crore mark in AUM during the quarter, supported by strong client additions and healthy business growth. And more importantly, the company has also said that it will seek SEBI approval to sponsor a mutual fund and set up an asset management company. On the back of these strong earnings, the stock is up almost 4% as we speak. And lastly, also throwing the spotlight on Apollo Micro. Of course, it's in focus after it entered into a share purchase agreement with the promoter shareholders of Premier Explosives to acquire 41.3% stake in the company for 1,550 crores. We exclusively spoke to the management of Premier Explosives earlier in the day on the channel, and they did say that they're looking at very good synergies on the back of this acquisition in the near future. So yes, looking good for that one as well. It's a 3% uptick on that stock. But let's take a look at what the market is up to and what it has been up to in the first 1 hour of trade. While you've got good moves coming in from the broader end of the market, it's actually the India VIX that has cooled off, and it looks rather good on that front. And you've also got some very healthy moves coming in from the broader end of the market. Of course, the earnings candidate TCS is doing well from the large cap pack, but if you take a look at updates from Muthoot Microfinance and the earnings from Anand Rathi, well, these are some stocks that are doing well. From the broader end of the market, it's names like Kalyan Jewellers that continues to do well. You've got Zen Technologies that's the stock is abuzz as well. So those are some stocks to watch out for. And that's the kind of move that we're seeing coming in on the market. But shifting focus then, let's talk about Anand Rathi Wealth and the strength that we've seen in the numbers coming for the company. 1 lakh crore AUM mark is something that the company has crossed. And of course, it's planned to launch its mutual fund business. They're seeking the SEBI nod for that. All of these announcements, other than the earnings by themselves, have kept the stock rather excited. So let's interact with the management of the company. We've got Mr. Rakesh Rawal, the CEO of Anand Rathi Wealth, joining us on the show. Mr. Rawal, thank you so much for your time. And despite a largely flat equity market during the quarter, AUM has crossed 1 lakh crore rupees. How much of the AUM growth was driven by fresh net inflows versus market appreciation, and how sustainable is this momentum going ahead?
See, there are two parts or three parts of AUM movement. One is what is the net money that you bring in fresh from customers. That's been in the range of 2,500, 3,000 crores per quarter. The second is the market increase. The index goes up by some percentage, etc., etc. Yeah, that's not done too well, which is fair. The third is what is the return that you can make for your client over and above the index. Yeah, so that has also worked for our clients. So, for example, in this quarter itself, the mutual fund portfolio that our clients are having, the index has gone up about 6-7%, whereas the mutual fund growth has been in the range of about 11-12%. Yeah. So the value that you create, the net monies, and the market, three constituents are there for AUM growth. Fortunately, they've all worked for us in the last quarter, which is the constituent of the 20% growth. In terms of how do I see this in the future, I think that the markets which have been muted, you can't have muted markets forever. So therefore, the growth of the markets is compressed. And somewhere, as the environment becomes better, that is going to spring forward. So in the next 12 months, I expect the markets to really push the AUM forward. Our efforts in net mobilization continue to be high, and therefore we expect good net mobilization to come. And the third is the strategy that we follow with clients has been adding value over the last 10 years, 12 years. I don't expect that not to add value as we go along. So I see a very, very bright future in the next 12 months for the company.
Okay, that sounds very optimistic, Mr. Rawal, and you're seeing further increase and robust increase to the AUM. That sounds good. Let's talk about net inflows. They were at about 2,743 crores this quarter versus 13,447 crores for all of FY26. Is this a genuine slowdown, or does it reflect the self-governance adjustments that you described on the last call? And how should we be reading Q1 inflows against this 1.2 lakh crore AUM guidance for FY27?
Yeah, so there are two separate questions. One is 1,20,000 crores of AUM. If we are at 1,06,000, and I just said that the market should be better. So to my mind, there is very little threat to 1,20,000, and we believe that we should get there. As far as net inflows are concerned, see, net inflows are also subject to the mood of the client. So whenever markets are down, there is negativity in the world, the fear content is high, there is reluctance in the customer to invest money. Yeah. So whatever net inflows we get, we have to cross this hurdle of reluctance, persuade him to give money. Now, if you reverse the situation, if there is overall buoyancy, then my effort to get a unit of money from the client is far lower, right? And my result is far higher. So I value this 2,700 far greater than 3,500 in good times, because this is the base that when good times comes, the number of 3,500 will be crossed. crossed very easily. So when difficulty is high, I'm able to get 2,700 is equal to 4,000 in good times. Yeah. So there is no change. It is just that the times are a little tough. We are still getting very, very good net inflows and customer buying. And when times change, the momentum will be still better. Again, 1,20,000, I don't see a threat.
Understood. So that also sounds very positive in a directional sense. Mr. Rawal, how has the mix of equity, debt and structured products evolved during the quarter, especially in a relatively range-bound market as we've seen in the last 12 months?
If you notice, broadly, our ratios of our overall AUM have remained near constant, with close to about 27-28% in structures, 15-16% in other assets, and the balance in equity mutual funds. Now, various stages of the market, this ratio has remained the same. And that's because we are governed by trying to achieve an objective for the client of in the range of 14-15% return, for which there is a common strategy of putting 65% into mutual funds and 35% into structures. So that hasn't changed. So if the method to get to 14-15 hasn't changed, I don't expect the ratio to change. So the ratio being same is indicative that the strategy is largely being followed by clients.
Okay, Mr. Rawal, I've been looking at the numbers, and something that really stood out to me is the employee expense. That increased 53% on a year-on-year basis, which is significantly ahead of the quantum at which your top line has grown. What has driven this? What has led to this? And by when do you expect the recent RM hiring to translate into meaningful revenue, and when should operating leverage start to play out?
There are two parts to it, and therefore, if you remove the one-off on ESOP expenses, then our RM, the employee expenses are in line with the previous years, in line with the revenue growth. Yeah, so our profit growth, without either the effect of the one-off revaluation of assets and the one-off cost of ESOP expenses, that profit growth is 24%. Yeah, our revenue growth is 18%. So there is operating leverage, already exemplified in whatever we are doing so far. So look at it minus the one-off entries. Yeah. The second thing is that yes, over a period of the next 2 years, I think operating leverage will continue to give us some gain, beyond which we'll have to, beyond which it will be more in line with revenue growth equal to profit growth.
Understood. And Mr. Rathi, you've also, Mr. Rawal, you've also announced, a lot of other plans for the company along with your earnings. Can you give us a framework of the investment phase of the AMC, expected capital commitment, operating losses during the build-out period? I mean, anything that you can give to us directionally when you are looking to break even in the AMC business?
Firstly, the AMs operate for about 3.5, 4 years, and their cost is built into the RM profitability. Yeah, so it is the RM and the AM together servicing a client, and therefore together with them, all of them are profitable. When we promote an RM to promote an AM to an RM, in 90% of the cases, he is profitable in the first year itself. So I don't see there being a long period of gestation to cover losses of employment, which doesn't get covered in the first year itself. So I don't see that as an issue at all. Normally, when people get promoted, they make profits in the first year. May not make large profits; they'll make moderate profits, but they will be profitable in most cases.
Sounds good on that note. And Mr. Rawal, lastly, let's talk about your bottom line. The PAT growth has been 24% and it has outpaced your revenue growth of 18%. Should the market extrapolate further margin expansion from here, or are there investments in RMs like we've been talking about, international expansion and the new AMC business that could limit your operating leverage?
Well, I think that it will be moderate increase in operating leverage over the next couple of years. That is not to say that, hey, whatever growth opportunities that we will get, we will continue to pursue. But despite pursuing them, there'll still be some moderate increase in operating leverage.
Okay, we'll be watching out for that. And on that note, Mr. Rawal, thank you so much for your time today. Good as always to be speaking with you. Thank you so much. Viewers, with that, it's time to slip into a very short break on this edition of Midcap Masala. On the other side of the break, we're going to be interacting with the management of Just Engineering on their lofty FY31 plans, the recent tariff reversal and the refund that the US business has received. What's the outlook over there? So much to talk to with the management. Stay tuned and we'll begin that interaction just on the other side of this very short break. Midcap Masala, and you're still catching us live from the Suzlon studio here at ET now. And as promised before the break, let's jump straight to the conversation with the management of Just Engineering. We've got the CMD of the company, Mr. Pratik Patel, joining us. Mr. Patel, hi, morning. Thank you so much for your time. And, let's start by talking about your FY31 vision. You have reiterated a target of crossing 1,500 crore in revenue by FY31. What are going to be some of the key growth drivers that give you the confidence in achieving this milestone? And how much of this growth is going to come from your existing core businesses versus your newer acquisitions, Westech India as well as Penstocks UK?
For achieving 1,500, what we'll be needing is investment in new plants. So we have investment in Saudi Arabia plant as well as in a new plant in Houston. Market-wise, we are already strongly based now in US and UK. We are also expecting good growth in Middle East when the Saudi plant is operating. So I believe we have covered most of our markets by being locally in those places. India is already evolving as a next big growth in water sector with lot of investment planned in treatment of wastewater. So I believe looking to our broad-based markets, Southeast Asia, Far East Asia, Middle East, Europe and America, I think we are well placed to achieve this 1,500 target. Coming to our new acquisitions, Westech and Penstock, well, they are at the infancy stage. These both were done only recently, a few months back. We are recalibrating our strategy. We are putting new organization in place for growth. We are quite confident we should be able to grow this company to 3 or 4 times their revenues in next 4 years' time.
Okay, that sounds really good in terms of your acquisition, the growth plans for your recent acquisitions. Mr. Patel, you plan to set up manufacturing facilities in Saudi Arabia and Houston by FY28. Talk to us about what the capex plans are, how you are looking to fund this capex, and what are the kind of opportunities and market share that you are targeting in both of these markets.
Let's start with America. The Houston plant will be our second plant in America. Houston plant will require an investment of $9 to $10 million. We have already raised $3 million 2 years back by giving preference shares, and that amount is in banks in America. The remaining would be brought by loans from American banks as well as internal accruals. The investment in Saudi Arabia would require $3 to $4 million in the first phase. And for that also, we are targeting internal accruals as well as loans. So largely, I believe the expansion is financially closed as far as we are concerned.
So no impact on the debt of the company whatsoever, right?
A very minor effect on the debt. I would say around, for doing this expansion, we are looking at debt raise of around $3 to $4 million, which is nothing.
Understood. Understood. So we'll be watching out for that. Let's talk about the entire tariff angle to your business, right? Mr. Patel, FY26 was largely impacted by tariffs and shipping disruptions. Are these challenges now largely behind the company, and how are you seeing the export environment evolving in FY27?
Tariff, I would say, is behind us, though you can never be certain about it due to the conflicting change in America. But whatever happened in the past, we have learned from it. We are cautious. So today, even though we are having a tariff of 15%, we are marking up so that in case any further increase in tariff is there, then we don't get a financial hit. We also are fortunate to start getting the tariff which we had paid last year. We already got a first installment of $540,000. We expect further $1 million to come in. So the last year hit of tariff will be compensated this year. Tariff as such doesn't affect our marketing or our competitiveness, because once the tariff comes in, the cost in America has also increased. So we are still very competitive in America. And for us, tariff is only an issue when we estimate X amount and the government increases that amount to Y. Then only we have a problem of the difference being paid by us. Other than that, tariff is not an issue for us anymore.
Okay, understood. Just to prod a little bit more on that point, Mr. Patel, you did say that you're looking at a further refund to the tune of $1 million. Can you help us understand if this changes anything for your PAT margin guidance of 12 to 13%? Any upside that we can expect to see here, or given in the broader scheme of things, $1 million is not very material for the company?
It would be material. We are projecting a PAT of around 105 crore this year, at a revenue of 875 crore. So around 15 crore adding to the PAT would definitely be significant. It was never budgeted for in 105 crores.
So then your what happens to the PAT margin guidance then? If you add this incremental amount to it, would you still stay in the 12 to 13% band, or are you looking at exceeding that?
It go up a little bit more.
Okay. Can you quantify what this little bit could be?
15 crore is 1% of 105. So 1 to 1.5% it might go up.
Understood. Lovely. Just wanted to hear that from you. And Mr. Patel, let's talk about your order book. You know, you've crossed about 900 crore rupees as per latest numbers. Can you help us understand what's the visibility of conversion of this order book to revenue?
See, out of 912 odd crores which we have on order today, close to 85% would be executed within this year. 15% is spillover because they are already projected for delivery in 27, 28. However, we have already achieved revenue of in excess of 125 crores. So if you consider that, we are comfortably placed to achieve revenue in excess of 875 crore and going as high as 900 to 910 crores.
Okay, understood. And let's talk about one segment of your business. The company's Butterfly Gates has recently achieved the CAN 61 certification, which is globally recognized for drinking water systems. How significant is this opportunity for you, and what are some of the orders? If already you are in talks with somebody, can you give us some idea in terms of where this segment is headed?
This is something which is a routine thing. We are making Butterfly Gates, but getting NSF certification means that we can supply for drinking water application. So it's not something which would materially change our way of working or way of getting business, but it may lead to incremental 2 or 3% addition in revenue.
Okay, understood. And, with a negotiated pipeline of roughly 55 crores awaiting conversion still, how is the overall order pipeline shaping up across India, US and Middle East? Are you seeing any improvement in the Middle East business?
Middle East last week we got an order for around 8 crore from Abu Dhabi. So yes, the traction has again started. But I would be conservative because the war has again started. So let us say that Middle East is still going to be dicey. By the time we set up the plant in 27 and 28, 27, we should be able to have a stable Middle East operations and looking to growth again in Middle East.
Okay, understood. And lastly, Mr. Patel, as per the latest earnings call, you have submitted offers of $800 to $900 million worth of projects to Singapore to combat their rising sea levels, which start tendering in 2028. How confident are you in capturing this estimated 20 to 40% market share via these massive projects? Any progress on tenders? I understand they open only in 2028, but any update on that front?
See, Singapore government has decided to do this investment, and they will do this investment. They want to save Singapore, they will have to do it. This investment will not be done in a year. It will be spread over 20, 25 years. So we expect that for next 20, 25 years, new tenders will come out, and this will give us an opportunity on the long term. And we expect, as we are very strong in Singapore, and currently we are doing a similar job in Hong Kong also, which is also a 38 crore job for Inlong Barrage in Hong Kong. And this type of technology, not many companies in India or many companies even globally have it. So we are quite confident of having significant market share. I would say for such a big scale of operation, if we get 10 to 20% market share, because all the world leaders will be there. So if we get 10 to 20% market share, then it should be a significant addition to our revenue for years to come.
Okay, understood. And that sounds really good. Mr. Patel, it's been a wonderful time talking with you today. Thank you so much for your time today.
Thank you.
Thank you. Viewers, that was the management of Josh Engineering. The biggest key takeaway from this conversation is that they're expecting a further tariff refund of $1 million, and that will boost their existing 12 to 13% PAT margin guidance by another 1 to 1.5% for FY27. So that's the biggest takeaway from this conversation. With that, we're completely timed out on this edition of Midcap Masala. Thanks so much for watching. Buy now, sell now takes all the action ahead.